Welcome back. We'll take you live to Parliament now, where the minority is given an official reaction to the 2025 budget statement. In your shot is Mr. Amin Adam, former Finance Minister.
She is the chair of the Public Accounts Committee of Parliament, and she will be followed by Honorable Dr. Gideon Boako, who is a member of the Finance Committee, and then Honorable Kojo Opon Nkrumah will end it all. He is ranking on the Economy and Development Committee of Parliament. So all four of us will be addressing different aspects of our reaction to the 2025 budget. And so with these preliminary statements, I want to thank you very much, members of the media fraternity, for your support in disseminating our message to the Ghanaian people. You continue to be our great partners in our quest to deepen our democratic dispensation. And we are very hopeful that we will continue to travel this journey with you. You will recall that days before the budget presentation to Parliament by the Honorable Minister for Finance, Honorable Kesel Atuforsen, who did the presentation on behalf of His Excellency, the President, President Mahama, we hinted at clandestine plans by the government to manipulate fiscal data to support their baseless claims of inheriting a badly managed economy from the previous NPP government. This carefully crafted strategy has been pursued right from the President himself during his message on the State of the Nation and repeated at the National Economic Dialogue. The 2025 budget was, however, going to be the vehicle for confirming what has been perfectly rehearsed, to crown the narrative by putting data to the unfounded claims. We have been vindicated. Our intelligence has been confirmed, and the minister has done the hatchet job. The government, through the 2025 budget statement, churned out fiscal deficit on commitment basis of 7.6% of GDP and a primary deficit of 3.6% of GDP. This would imply, if you look at them on their face value, that the NPP administration mismanaged the fiscals in accord with the intentions of the NDC government. In fact, an economy with such strong revenue performance and expenditure controls, as we have seen from the data the minister presented, cannot produce the kind of elevated fiscal outcomes the minister announced. We see a lot of contradictions there. And this, we are very confident, will be exposed. But colleagues, this is where it gets interesting. They have erroneously churned out this wrong data in a bid to tarnish the image of the NPP administration by including 49.2 billion Ghana cedis in expenditure claims without any basis. Before the start of the IMF program in 2023, we had agreed with the IMF to set the fiscal anchor based on which we will monitor the IMF program. And these were the fiscal balances on commitment basis, primary balance and overall fiscal balance. It was in a bid to have a real-time view on arrears accumulation. So we ring-fenced commitments that had gone through the gift mix system then and were awaiting payment. These commitments were termed outstanding expenditure claims. Thus, if you look at the 2022 budget outturn, you will see this concept in there. Per the IMF program, we then agreed to monitor the evolution of these claims vis-a-vis their net build-up. The reason for this approach is that Ghana is a developing nation with developmental needs. And so it was going to be unrealistic in the context of the program to not have new commitments. But the plan was to ensure that on net terms, the build-up remained almost neutral to avoid a significant build-up in arrears, which also hurts the economy. Also, it is important to note that if we look at the arrears clearance strategy prepared by the Ministry of Finance and submitted to the IMF in 2023, in fulfillment of the end September 2023 structural benchmark, the amount in expenditure claims, which we describe as arrears, was 47.5 billion Ghana cedis. This amount, after an aging profile analysis, had payments outstanding right from around 2012, 2013. So while we do not doubt the possibility of accumulating some arrears between end 2022 and end 2024, given our own peculiar liquidity constraints, including outstanding expenditure claims gathered from MDAs, we are very surprised that this was done without first undertaking the correct verification or audit of the numbers, which the minister himself alluded to in his speech, paragraph 135, under 2025 expenditure measures, as something he now intends to do. Therefore, just lifting a certain stock of expenditure claims of 49.2 billion Ghana cedis and inserting it into the fiscal frame to create an impression as though all those claims were generated in 2024 is not just including expenditures that are alien to the fiscal framework, but also shows a clear lack of understanding of the mechanics of the fiscal framework. But this is very surprising to us that the minister could do that, because we expected him to know. And if he doesn't know, we expected him to be advised by the technical people at the Ministry of Finance. We must also note that our fiscal framework focuses on central government operations. Therefore, claims which have not been properly audited can introduce many elements of general government, which is what we think has happened. A classic example is the Comptroller and Accountant General's final accounts, which is one of the sources of information for the fiscal framework, but is based on general government accounting. So if you take the information from it on the face value and plug it into the fiscal framework, you will be reporting on two very distinct items. And so what we usually do at the Ministry of Finance is to work through the numbers and pick the central government expenditures only. This can only be done, ladies and gentlemen, through verification and auditing. It is therefore curious how the finance minister will come to Parliament with a budget and say that the fiscal deficit and primary deficit on commitment, which he announced, were derived using a certain data on claims, which he is yet to audit. Yet, he has announced results derived from the data to the effect that the economy was badly managed. It is too elementary to know that when you have not audited your figures, you cannot use them for an important work like the national budget. Otherwise, you create credibility problems for the conclusions of the budget, as the Honorable Atufosin has just done. And so you put 49.2 billion Ghana cedis in the fiscal framework to arrive at higher fiscal deficit. And then, in the same budget, you say that you are yet to audit the 49.2 billion Ghana cedis. So on what basis did you validate the 49.2 billion Ghana cedis before putting it in the data, which threw the fiscal deficit away? And you come and announce to the Ghanaian public that the government mismanaged the fiscals of the country. This is Azar, this is Sakawa. The technical people at the Ministry of Finance are professionals. And I don't know if the Honorable Atu refused their advice. What I do know is that we've gone through 3 successful IMF reviews, and the technical people never told us that we needed to compile claims from several years and include it in the fiscal framework as if they were accumulated in 2024 alone. We were never told that. 3 reviews. Why they will do that in the last review, the 4th review, that is going to happen, we don't understand. And this is why even the IMF has to speak to this. Because you cannot have inconsistent methodologies in assessing program implementation. You did the first review, the second review, the third review. You didn't bring arrears from multi-years into the fiscal framework. You use only arrears accumulated from the beginning of the fiscal year, the very fiscal year you are assessing. 3 of them, you didn't do that. Then in the 4th one, you asked ministries and agencies and departments that they should just write what projects have they done which have not been paid. And they brought you those projects and you compiled it, amounted to 49 billion, and you say these are claims that must go into the fiscal data. Unfortunately, what the Honorable Minister failed to do is that the only arrears, so-called arrears, that we can call arrears, are those that have gone into the gift mix system because they have been audited, they have been verified. But any other thing that you call claims cannot be arrears unless they go through the verification and auditing and the system, the gift mix system. Yet, you take the budget statement, you look at the fiscal table, and you will see that the minister, under the arrears clearance, has 2 lines under arrears build up. The first line is arrears reported in the gift mix. Then the second line, which he created artificially, he called it unreleased claims. Unreleased claims. That is very alien to the fiscal framework. And that 49.2 billion is what took the fiscals out of gear. So we know what they did. Ladies and gentlemen, even the IMF technical memorandum defines how to derive primary fiscal balance. The IMF technical memorandum that we signed with them, Government of Ghana signed with them, states that the program's primary fiscal balance is cumulative from the beginning of the fiscal year. So if you go and bring arrears dating back to 2012 or claims dating back to 2012, 2013, when the IMF's own definition of primary fiscal balance says those accumulated from the beginning of the fiscal year, you see the challenge there. That is one of the challenges. Then the definition goes further to say that which is measured as the difference between the primary balance on cash basis from the financing side, that's the difference between revenue and expenditure, and then also net change in the stock of payables or arrears of the central government reported in gift mix. The IMF has stated that clearly, reported in gift mix. So first, the definition says accumulated from the beginning of the fiscal year. You have brought in claims from several years. The definition also says that they should be reported in gift mix. And you have brought data which is not reported in gift mix. And you come and tell us you have done justice to the fiscals? No. This is statistical thievery. Ladies and gentlemen, the government must therefore explain how they came by the methodology used in computing the fiscal balances. I am really lost as to how they drive the fiscal balances without fully applying the methodology agreed with the IMF in the Technical Memorandum of Understanding. What is even more concerning, ladies and gentlemen, is the minister proudly declaring to the world, based on the voodoo computations he has done, that his country has breached the IMF program, when the evidence is to the contrary. And when the IMF itself is yet to conduct a review of program implementation in April 2025. So IMF is yet to do their review. But the minister, whose performance is to be reviewed, has already announced to the world that he has breached. The NPP is no longer in government. The NDC is in government. And so if there is a breach, it is not the NPP that has breached. It is the government of Ghana under President Mahama that has breached. I believe they don't know this. But ladies and gentlemen, is it not even surprising that the finance minister of a country will wish his country drilling an IMF program even before the IMF conducts a review? Yet, the same minister in the same budget projected foreign financing for his budget for the year to include $720 million from the IMF and $600 million from the World Bank. How come the government doesn't know that when Ghana fails a review, IMF review, because of the manipulated data they used, they will not receive the $1.3 billion from the IMF and the World Bank. How come they don't know that? And yet you go and put $1.3 billion in the budget that you will receive from the IMF and the World Bank, and you are declaring that you have breached. And when you breach, the money will not be disbursed. So this already throws your budget off gear. So this budget cannot be a realistic budget. Ladies and gentlemen, do they even know that all the reliefs we got as a country from the debt restructuring we did with our Eurobond holders, with our bilateral official creditors, bringing us outright cancellation of almost $4 billion of our debts. Outright cancellation of almost $4 billion of the debts we owe them. And then $7.5 billion of debt service relief. If you put all of them together, you are talking about 12 billion United States dollars that the NPP government negotiated and got these reliefs for Ghana. But this is also tied to the IMF program. So breaching an IMF program means that you go back to the status quo before the debt restructuring. Are they aware of that? I believe they have been briefed, but they've ignored good advice. Do they even know that when all this happened, Ghana will be brought back to unsustainable debt levels and occasion an economic crisis? How will they fund the programs outlined in the budget then? How about investor credibility? On the 2025 fiscal framework, another baseless revelation in the budget is the projection of a sudden reduction in the commitment primary deficit from 3.9% of GDP in 2024 to a sudden primary surplus of 1.5% of GDP in 2025. I wish it were that simple to adjust by 5.4 percentage points between 1 year. I wish it could be done. But this is not possible. And so again, their projection of the fiscal balances for 2025 make this budget not credible and requiring serious scrutiny by the IMF and the people of Ghana. We, the mighty minority, would like to call on the IMF to speak to this in the spirit of transparency, which is one of the cardinal values of the fund. This should be done as a matter of urgency before much damage is done to our country's economy. Already, the government has announced it is returning to the bond market, yet they could not even acknowledge the enhanced debt environment created by the previous NPP government for bringing Ghana's debt to GDP ratio at the end of 2024 to 61.8%. 61.8%. You recall, we had to go to the IMF because of debt distress, because of unsustainable debts. Our debt levels had gotten to about 81% of GDP. If today the debt levels have come down from 81% of GDP to 61.8%, that should tell you that this is not by magic. This is as a result of skilled negotiation by the government. It's as a result of the implementation of a very powerful debt strategy that we have had to implement to bring the debt levels to that level. And ladies and gentlemen, let me add that the 61.8% debt to GDP ratio is lower than the pre-COVID-19 debt to GDP ratio of 65.7% in 2019. So if you look at the debt trajectory, you will see before COVID, our debt to GDP ratio was lower. But because we had to borrow so much to finance our COVID interventions, we had to borrow also to do to address the effect of the Russia-Ukraine war. We had to borrow for the financial cleanup exercise as well. The debt levels went to that 80%. And so if we have now brought it to the level better than the 2019 pre-COVID, it tells you that the NPP government has successfully brought Ghana's debt levels to accelerated, sustainable path. The least the NDC can do is to continue to implement our debt strategy. After all, what is the target of the IMF as far as our debt levels are concerned? The IMF projects Ghana to achieve a target of 55% debt to GDP in net present value terms by 2028. 2028. If by the end of 2024, we've already brought it down to 61.8%, then it means that it is left with just 6 percentage points to achieve the IMF target. And so the NDC government should be able to achieve this in the middle of this year, long ahead of 2028. But Gideon will tell you, the way they've started borrowing, the rate at which they are borrowing, we are very worried that they may return us to unsustainable debt levels. Ladies and gentlemen, let me add that these debt levels I'm talking about, 61.8%, compares favorably with the NDC's debt to GDP of 73% in 2016 when they left government, until the GDP was rebased in 2018 before the figure changed. But the actual performance in terms of debt sustainability by the time the NDC left office was 73%. So you are saying that NPP has overborrowed. Yet we ended our tenure with 61.8%. But you, who didn't borrow, you ended your term with 73%. Ladies and gentlemen, it is surprising, nevertheless, that notwithstanding the improvement time announcement of the minister to enter bond markets, and I'm sure you have heard, the minister has announced that he is going into the bond markets. They are going to open up the bond markets. And I'm saying that this is not good advice. And this is my reason. The timing for the announcement of the minister to open the bond market coincided with the announcement of the elevated fiscal deficit based on their manipulated data, a condition that exposes the country to high risk of borrowing from the markets. The effects of this unfortunate data manipulation are already hitting our economy, already, since they read the budget. Why do I say that? The government must know that just by presenting such erroneous data as propaganda to score cheap political points, Ghana's sovereign bond spreads are already widening, again, nearing 700 basis points, when almost 3 months ago, this had declined to 500 basis points and was even heading further downwards. Why do we want to destroy the gains which we have made through cheap politics? Also, Bloomberg reported last Tuesday, 11th March, the very day the budget was presented to Parliament, that Ghana's dollar sovereign bonds were among bottom performers in emerging markets, after the Minister for Finance said the country missed a primary budget balance target of 2024. Just after saying that, this is what the market is saying to us. Dollar bonds due 2035 declined 1.8%. Notes maturing in 2029 fell by 1%. So international markets have not reacted kindly to the budget, demonstrating their lack of confidence in the government's economic policy direction. So you see, if you cook figures to create a narrative to run your country down, international investors will show you where power lies. That is what is happening to Ghana already. Sadly, if you decided to take away the 49.2 billion cedis they put in the fiscal framework, the overall fiscal deficit will be 3.4%, not the 7.6% the minister announced. And the primary balance will be surplus 0.6%, not the deficit 3.1% the minister announced. Ladies and gentlemen, indeed, both the overall deficit and the primary balance would have been better than the targets in the 2024 budget, as well as the IMF targets for the next IMF review to be conducted in April this year. Sorry to say, the government didn't want this good narrative, because that would have signify the prudent performance of the economy under the NPP. But they didn't want that, and therefore Ghana should suffer. I am wondering how well the international markets would have responded to the budget if an accurate picture was put out. Ghana is the loser. I'm sorry about this. Ghana is the loser. A big opportunity missed because of unhealthy politics. The reaction of the international markets will even be worse than what I am reading to you. In the event that the IMF review fails because of this manipulated data used by the government, the international market will even react violently towards Ghana. But in good conscience, we believe that the IMF will be fair to the Ghanaian people by holding on to the agreed method of computing the fiscal data during the review, as they did in all the previous reviews. Other than this, the Ghanaian people stand to suffer, and not the politicians, from these obviously bad political decisions. The Ghanaian people can recall that in the past, Ghana was fined $39 million for misreporting economic data to the IMF due to wrong data submitted by the NDC government led by President Rawlings, the former President Rawlings. It appears we are on our way there under another NDC government, under President Mahama. We wish to advise the Minister for Finance to tread cautiously in order not to derail our march to sustainable debt levels. Ladies and gentlemen, as you know, the manipulation of the fiscal data notwithstanding, the strong health of the economy the NPP handed to the new NDC government continues to be vindicated by other economic indicators. So even as they have manipulated the fiscals, there are other indicators that are evident of the work we did and our performance during the period of Akufo-Addo government. The debt to GDP ratio of 61.8%, as I mentioned earlier, achieved in 2024, was not by accident. It was due to skilled negotiation and the implementation of a good debt strategy. The Honorable Minister, if you watch him during the presentation of the budget, could not even acknowledge this important development by the imminent absence of this ratio in his budget speech. He couldn't even mention that amount of the debt levels in his budget speech. But we know that this is historic, and history will be kind to Akufo-Addo government. Another good news for Ghana was the announcement by the Ghana Statistical Service of a real GDP growth rate of 5.7% for the 2024 fiscal year. This is the highest in 5 years, the highest growth in 5 years since 2020. But the recovery from the global crisis had begun in 2023, when GDP growth surpassed 1.5% target to end the year at 3.1%. That was when the recovery began. The 5.7% growth in 2024 was more than the budget target of 3.1% and the revised budget target of 4%. The growth was led by industry for the first time in many years. For many years, the services sector led our growth. In 2024, for the first time in many years, industry led our growth with a growth of 7.1%, followed by services at 5.9% and agriculture at 2.8%. This means that the Ghanaian economy has entered the phase of structural transformation, another historic development. This is what economists call structural transformation. You have the services sector leading, and then you have the industry overtaking. There has been a structural transformation of the economy, and this occurred again under the NPP government. Again, surprising to me, the minister tried to downplay this major achievement by attributing this growth to mining, which grew at 9.4%. He actually called it galamsey, which grew at 9.4%. However, what he doesn't know is that the same data from which he took the growth of the mining sector points out that the construction subsector grew by 9.6%, more than the growth in mining. So why couldn't he say that industry growth was led by construction sector? Yes, that's Statistical Service data. And yesterday the Statistical Service said it. Why couldn't he say that? And manufacturing, after many years, grew by 3.9%. Manufacturing. It used to grow negative, 3.9% this time. In the services sector, we saw a notable growth of 15.8% in information and communications, largely due to the digitalization agenda implemented by Dr. Mahmoud Bawumia. Certainly, our economic growth story shows that growth was not a jobless growth. And that was why up to 2.3 million Ghanaians got employed under the NPP government. Unfortunately for the NDC, their growth strategy produced lower growth throughout President Mohammed's first term as president, and in particular, producing 4% growth in 2015 and 3.4%, a paltry growth, 3.4% in 2016. Curiously, ladies and gentlemen, with all the promises the NDC is talking about, programs they are talking about in the 2025 budget, curiously, this government is projecting to grow at just 4.4% in 2025. How could a reset economy slow growth following just a strong growth of 5.7% the year before? How could a reset economy project to grow at 4.4% when the economy the president described as criminally mismanaged grew at 5.7%? It must also be noted that despite the hype about the 24-hour economy, the initiative the NDC talks so much about, the initiative does not promise to deliver accelerated growth in the economy, because industry performance is not promising. Industry performance, as projected by they themselves, is not promising. The budget estimates that projected growth rates for industry averages 5% between 2025 and 2027. It's in the budget. 5% that industry will grow between 2025 and 2027. And if the 24-hour economy is actually going to work, we expect growth from industry in particular to be higher than this. And so, if you compare this with the industry growth of 7.1% in 2024, then you wonder what will be the benefit of the 24-hour economy if industry does not reach the heights of the previous NPP government. We also know, and we have heard since the budget was presented, that there is no program in the budget on the 24-hour economy initiative. In fact, the minister himself said they will launch it soon. If it is not in the 2025 economic policy and budget statement, then it is not for 2025. It means no money is to be voted for it. So Ghanaians will have to wait at least until 2026 if we are lucky to have any hope of seeing how this campaign slogan translates into jobs. NDC, as you know, campaign on 24-hour economy, and yet they are in no hurry to deliver on it. NPP campaigned in 2016 on free senior high school, and it was delivered in Akufo-Addo's first budget of 2017. Yeah. Still on our record performance, not only were the trade balances brought from deficits under President Mohammed's first term to surpluses under Akufo-Addo Bawumia government, but our capacity to withstand shocks and other external vulnerabilities improved significantly, with a record gross international reserves of $8.9 billion, the equivalent of 4 months of import cover. This compares better against the reset economy's projected gross international reserves of 3 months of import cover. So the 8.9 billion we have given them, what are they going to do with it such that this year, 2025, one day should be increasing it to 11 billion? They are talking about 3 months of import cover. So, ladies and gentlemen, this is the technical bit. That gives you the background of where we are coming from. The economy that has been described as bad and figures manipulated to create that narrative. You have heard from me our record. And this data is public data. But we are yet to even hear more about the 2025 budget itself. And to start with this, I have the pleasure to invite my colleague, the chairperson of the Public Accounts Committee of Parliament, the Honorable Abna Osei Asare.
Thank you very much, Honorable Dr. Amin Adam. And thank you very much for the opportunity as well. I will go into the fiscal sector. The fiscal sector will look at the revenues as well as the expenditure for 2025. You change position. Okay.
No, don't worry.
Like I said, I'm going to look at the fiscal sector for 2025, and that would involve the expenditures as well as the revenues that they voted in the budget. Let me begin by saying that it is interesting that the minister, in highlighting his fiscal policy strategy for 2025, uses phrases such as, "It is crucial that we establish macroeconomic stability and debt sustainability." A few months ago, the IMF concluded its third program. Let me quote just a section of the staff reports. Ghana's policy and reform efforts under the IMF-supported program have continued to deliver encouraging results. Following acute economical and financial pressures in 2022, the fund-supported project has provided a credible anchor for the government to adjust macroeconomic policies and launch comprehensive reforms to restore macroeconomic stability and debt sustainability, while laying the foundation for higher and more inclusive growth. These efforts are paying off, with the growth recovering rapidly, inflation declining, although at a slow pace, and the fiscal and external positions further improving. End of the quotes. So clearly, we have laid a solid foundation for this government to operate. And so it is very disingenuous for them to create an impression as though we have bequeathed an economy full of problems. Let's come to the revenue numbers they showed in the 2025 budget. In 2025, the real growth of total revenue and grants, as we see in pages 132 of the budget and pages 134 of the budget, is just 0.2 percentage points. We left it at 15.9%. That is tax to GDP. We left it at 15.9%. And an economy that claims to be resetting is only growing revenue by 0.2%. That is 16.1% of GDP. At the end of 2024, our revenue numbers were 186 billion Ghana cedis. And they want to grow 124 billion Ghana cedis in 2025. Like I said, the growth in real terms is not encouraging. But when you listen to the minister on Tuesday, in paragraph 173,
Imagine a family without a home. Imagine a song without a voice. Imagine a church without prayers. Imagine a government
my minister, the former minister, made mention of a 24-hour economy, and so I will skip that. But let me say that when you compare our expenditures in 2024, when we had an election, usually with elections, the government spends so much because they have to give the Electoral Commission everything that they will need to conduct a free and fair election. So when you look at the appropriation for 2024, clearly with an election that was fully funded by government alone, the appropriation was 250 billion Ghana cedis. Here we are, NDC telling us that they want to cut waste, reduce, rationalize expenditure, and reduce the waste in the system. They are giving us an expenditure, an appropriation of 291 billion Ghana cedis. 291 billion Ghana cedis. No election. We are cutting down. So they say one thing, and the numbers in the budget speaks to something completely different. That also boils down to the credibility of the budget. Let me come to the uncapping that the minister spoke about. The expenditure measures of uncapping transfers to some statutory funds to enable them to fund other government programs is no-brainer. We have done it before. And so it's just continuing with what we also did. Every government has its discretion on how to fund its programs. While we cap the transfer to the statutory funds and use the cap transfers funds to fund free SHS and other programs, this NDC government has decided to uncap transfers to Get Fund so that Get Fund will fund free SHS. We have done it before. It is nothing new. We uncap and cap, and it's at the discretion of the minister. Where you find that you need to restore the capping, you restore it. And we did that in 2017 when we realized that NHIS was saddled with a debt of about 2 billion Ghana cedis in claims. In 2016, that was what the NDC left for us, and we made sure we provided enough funds by restoring the cap funds in NHIA to enable them pay this. So we have done it before. It is nothing new. And so we were thinking that with the resetting, something innovative was going to come up, but nothing new came up. We have done it before, and it is normal. Also, by virtue of the debt restructuring, let me say that the government absorbed the Get Fund debt. And so once we absorb the Get Fund debt, there's more room for Get Fund to take on other equally important things. When you also look in the budgets that they provided for us, you realize that all funding coming from the oil revenues, that's the annual budget funding amount, the ABFA, every little fund coming from that has been put into the big push, 13.8 billion, which includes our mineral royalties and the oil revenue as well. And you ask yourself, you dedicate 13.8 billion Ghana cedis into this fund. But when you look in the budget, this is supposed to be their documents for policy and directions. You don't see so much about the big push, but here we are, they voting 13.8 billion Ghana cedis to an initiative called the Big Push without any skin or flesh for Ghanaians to see what exactly they want to do. Per the Earmark Funds Capping and Alignment Act, it is okay for the minister, like I said, to exercise discretion with statutory funds. And so we await to see what the minister will do once they bring the amendment to Parliament for us to look at it. The minister also said a lot about social spending. As part of the IMF agreement, we were supposed to spend a certain amount of our revenues on social spending. These 4 social spending initiatives: capitation grants, NHIS, and LEAP, and school feeding. So when the minister mentioned that there's a strategy, and so they are going to increase that of school feeding, they are also going to increase the numbers for LEAP. It is something that is already drawn out in the IMF program, and as and when you get there, you implement it. So that is also nothing new. So in resetting the economy, clearly nothing new has been given to us. Let me also state that for me, I was thinking that, and we were thinking that if clearly the minister wanted to rationalize expenditure, he would have created that enabling environment for the private sector to take up that heavy lifting. That was what we were thinking, that clearly if you want to cut expenditure, give that heavy lifting to the private sector. Come up with initiatives that will support the private sector to take up the employment, grow the industries, and take that burden off government. But we did not see that. The measures outlined to enable the private sector growth, such as the support for women entrepreneurs, agriculture for economic transformation agenda, the rapid industrialization for jobs initiative, among others, are all centered heavily on the government. And these things, once it's on government, it's temporary, it's not permanent. And so you cannot grow the economy as you ought to grow if you had given that space to the private sector. So I believe that the budget failed to provide the mechanics of the policy, making all these huge fiscal implications that I have mentioned credible. And so they will have to come back again to tell us how they are going to fund this and also help the private sector. You see, the Ghana Cares program, the NEIP program, and the U-Start were initiatives helping the private sector to grow. Now, funding has been removed from all these initiatives. The U-Start, the Ghana Cares were addressing the issues of the SMEs. And we know the important role SMEs play in this country. They, give us about 70 to 80% of employment. And then they also sustain and hold the economy. And you heard the minister mention that our growth of 5.7 in 2024 was being led by industry. And so if you take out these small supports that government was giving to them, then clearly we are in for some disappointments in that area as well. And so what I want to say about this budget is that it looks ambitious. But when you look at the numbers doesn't tell that story. Before I end, I also want to put on record that we have seen some new development in the expenditure numbers. That's a bit shocking to those of us on this side. Look at the compensation amounts under Office of Government Machinery. During the NPP era, Office of Government Machinery had a budget for compensation of 326 million Ghana cedis. And that included the development authorities, included the scholarship secretariat, and a couple of other agencies. Maslog, SIGA, and the others. But here we are in 2025, when you look at the expenditure numbers. The compensation under OGM is 2.7 billion Ghana cedis. From 326 of a perceived overblown government to a lean government of 2.7 billion Ghana cedis, where they have also taken away some of these agencies. Now SIGA is no more under Office of Government Machinery, it's under Ministry of Finance. Internal Audit Agency is no more under OGM, it's under Ministry of Finance. Scholarship Secretariat is no more under OGM, it's under Ministry of Youth and Development. There are quite a number of these agencies that were under OGM in 2024 that have been scrapped, the development authorities. Yet still, you see a budget of 2.7 billion Ghana cedis for compensation alone. They will say that they have added Ministry of National Security. National Security in 2014, compensations budget was 1.28 billion. So assuming you add 10%, give or take, and then let's say it goes to 1.4 billion Ghana cedis for national security, and you add the 326 that existed in 2024, it comes to about 1.7 billion Ghana cedis. So there's a clear difference of 1 billion Ghana cedis added to a lean government's compensation. Ladies and gentlemen, we need answers. That is why I say that the budget lacks credibility, and so they should come again. On this note, I would like to invite my brother, Dr. Gideon Kwako, to take over from me. Thank you very much.
Thank you very much, Honorable Abena and on the note that she ended, just some little information to indicate how reckless the President Mahama government intends to be in terms of the expenditure. If you go to Appendix 4A, page 139 of this budget document that was presented to Parliament, it talks about some of the expenditure lines. And under the Office of Government Machinery, we have a research department. And the research department, when President Akufo-Addo was there, he had a research department headed by Dr. Ezeko Osu-Mensah. President Mahama is allocating 50 million cedis for goods and services for research department at the Office of Government Machinery. A4 sheets, printers, pens and papers, office at the Office of the Research Department. All of that 50 million cedis. And CAPES, 20 million cedis. Office of Government Machinery, Research Department. Maybe a head and 2 or 3 assistants sitting in one office, 70 million cedis. This is a government that wants to cut costs. Again, the same appendix. We have government communication. This is Felix Ofosu-Kwakye and Shamima Muslim. Government communication. They said they have collapsed Ministry of Information. They've saved money. Yet, under government communication, headed by Felix Ofosu-Kwakye, deputized by Shamima Muslim, let's say they have 2 or 3 research assistants helping them, scrolling through social media, Ghana web, to see what is happening there to respond. They are giving them goods and services budget of 8.8 million cedis. Maybe they will use some to buy internet data to go to the internet, TikTok and co, to respond to what minority is saying. And they are giving them 70 million cedis, making 78.8 million. This is higher than about 3 or 4 ministries put together under President Akufo-Addo. This is higher than 3 or 4 ministries' budgets put together under President Akufo-Addo. This is the lean government Ghanaians voted for. I'll go to my main substantive issue. And I will briefly address the issue of debt and what the finance minister describes as an achievement by lowering the rate of the treasury bill market. And as we all know, the discourse surrounding Ghana's debt profile from 2009 to 2024 is both multifaceted and pivotal. Remember, under President Kufuor, we had HIPIC, and we were able to complete the HIPIC program, and that gave Ghana some external debt relief. And this led to a significant decline in our public debt to GDP ratio. However, the public debt stood at $8.07 billion in 2008 when President Kufuor exited. Under the NDC, for 8 years, Ghana's total public debt increased from $8.07 billion to $29.2 billion by the end of 2016. This, in cumulative terms, represents an increase of 261.83%. That is how much the NDC government, the previous NDC government, increased Ghana's total public debt. This rate of change indicates that on average, the NDC government added 32.75% debt to Ghana's debt stock every year, 32.75% every year, and cumulatively they increased it by 261.8%. Those who say that President Akufo-Addo has borrowed more So just listen to how much President Akufo-Addo added to Ghana's debt stock. Contrary to public perception, the public debt, which stood at $29.2 billion in 2016, has increased to $49.3 billion in 2024. This marks a little over 1.5 increase in overall, and this represents an increase overall of 68.83% to our total debt. The NDC in 8 years increased our public debt stock by 261.83%. The NPP under President Akufo-Addo increased that by 68.83%. And unlike the trajectory in 2009 to 2016, on average, the NPP government under President Akufo-Addo added 8.6% to Ghana's debt stock every year, whilst the NDC added 32.75% to Ghana's debt stock every year. Today, when they mention Ghana's debt stock, they forget to include that it includes all the debt stock built up to the NDC era. From independence. And if you do the computations and isolate, disaggregate it into regime by regime, they cumulatively added 261.8%, and the NPP did 68.3%. This is certainly not comparable. There's a lot of history to our debt, but I don't want to bore you with that. You will see that in the extracts. Remember, President Akufo issued the first Eurobond, and the NDC under President Mahama from 2013 to 2016, every year were issuing Eurobond to the tune of $1 billion every year. And Ghana had to pay the highest interest rates on our Eurobonds ever in the history of this country. Of particular significance is the one they issued in 2014. And even the one they issued in 2015, that was 10.75 or 75%, came as a result of even the World Bank intervening for Ghana. Otherwise, Ghana on its own balance sheet could not get that loan. That is the history of our debt performance. But it is important to put this into context. Whilst they were saddling the country with higher interest rates, a lot of mitigation had to be done by the President Akufo-Addo government to reduce some of these rates to benefit Ghana. For example, if you remember, when upon assuming office in 2017, government had to pay off 2 of the 4 Eurobond issued under NDC government in 2013 in 2016. So when President Akufo-Addo came into office in 2017, the bonds that were issued in 2013 and 2016 were due for payment. President Akufo-Addo had to pay. He didn't complain because government is a continuum. He had inherited assets, he had inherited liabilities, he went ahead to settle them. On top of that, the African Development Bank loan for the Terminal 3 project in 2015 had interest rate of 8.5% recorded in the books of the GCAA. And the NPP government renegotiated this interest to 5% in 2018. Again, the initial loan on the Tamakoso-Mbo Standard Gauge Railway project, which was signed in November 2016 and financed by the Exim Bank of India, had 6 months LIBOR plus 1.75%. But the NPP government in 2017 went to India to renegotiate that loan down to 6 months LIBOR plus 1.5%, saving this country money. Again, the Pokuasi Interchange Project, which was financed by the African Development Bank, led to renegotiation into 4-tier under Nana Akufo-Addo with same financing arrangement just as 3-tier that was contracted by the NDC. And lastly, if you remember, before they left, they had collateralized the road fund for 1.2 billion cedis loan from UBA Bank at an interest of 31.9%. This is a loan the NDC took from road fund, collateralized the road fund. So when President Akufo-Addo came in 2017, any funds that entered the road fund was swallowed by UBA. There was no money to construct roads. And they procured this 1.2 billion Ghana cedi loan at an interest of 31.9%. What did the NPP do? We did not complain. We simply put together our financial engineering arrangements and we renegotiated, we refinanced this loan with another facility from GCB Bank and Fidelity Bank at an interest of 22%. President Akufo-Addo had to save this country money by renegotiating the loan that was taken by the NDC at 31% and refinance it with 22% interest. There was no fund going to the road fund. They had collateralized it. So in 2017, President Akufo-Addo had no money to do roads in this country, but he went ahead to do the needful. Under the financial sector performance, the finance minister put out a lot of negative data, and that is affecting him, like the minister said, on the bond market. The Bank of Ghana's 2017 and 2024 publication of Summary of Economic and Financial Data provides very rich information about the performance of the financial sector. The annual growth in total assets of the financial sector as at the end of 2024 was 33.8%. This compares to an annual growth rate of 27.6% at the end of 2016. So when President Mahama left office in 2016, the financial sector was growing at 27.6%. By the time President Akufo-Addo left in 2024, it was growing at 33.8%. So today, Ghana's financial sector is robust and healthier than as it was under President Mahama. Again, the annual growth in total deposits at the end of 2024 was 28.8% as compared to 24.5% in 2016. People did not have confidence to take money to the bank in 2016 as they are doing in 2024 and today. Similarly, in terms of liquidity, core liquid assets to short-term liabilities, we grew it by 46.6%. And then on the capital market, we have seen similar growth performance with the Ghana Stock Exchange All Share Index year-to-date growing by 56.2% by December 2024. And I remember very well in 2013, I was writing a thesis on the Ghana Stock Exchange. The market nearly collapsed. But today, Ghana Stock Exchange is growing by 56.2%. The earnings and profitability ratios show that return on assets before tax recorded an annual growth of 5.4% in December 2023 and 5% in December 2024. Whilst return on equity after tax grew by 34.2% in 2023 and 30.8% in December 2024. It is no secret, therefore, that the strength of an economy is also determined by the strength of its financial sector. And lastly, before the Venerable Kojo Oponkroma comes in, the minister talked about the treasury bill market and talked about the decline in the rates. And this is what he said. Mr. Speaker, I am pleased to report that our government's proactive fiscal management has yielded a significant reduction in T-bill rates. This achievement is testament to the positive shift in investor sentiment regarding our country's economic outlook. Now, if there's a reduction in T-bill rates, what is the common expectation of Ghanaians? The common expectation of Ghanaians is that if indeed it is supported by the economic fundamentals, it must translate in a lower cost of credit. Other than that, it becomes sticky downwards. But let's ask the minister. T-bill rates have reduced to say 19.0%. What has happened to cost of credit at the commercial level? Loans we are talking about. Now, despite the minister talking about this, there are interesting developments happening on the T-bill market, anytime the rates go down, all that is being equal, it must be commendable. However, there are questions to be asked as to whether or not these rates are artificially managed by the minister and whether or not they are sustainable. And we have to ask the question whether the minister is controlling both price and quantity on the T-bill market. And I ask these questions for two reasons. First, the decline in the treasury bill rate is not consistent with the fundamentals of the economy. We have inflation at 23.5%. We have monetary policy rate at 27%. How then can you have a treasury bill rate lower than the inflation? If it happens like that, it means that treasurers and commercial banks who are participating in the T-bill market are participating at a real return in the negative. Because when you go for T-bill and you are earning less than inflation, it means that there's a component that is eaten away by the inflation. So it doesn't make sense. No treasurer, all other things being equal, will go and buy T-bills, gives him a lower return, and then inflation consumes the whole thing. Negative real return. Why is it that the monetary policy rate is still at 27%? And why is it that inflation is above the treasury bill rate? And like I've said, a good treasurer will not do this. And if any good treasurer will not do this, don't we suspect artificial hands to bring down the T-bill rates for propaganda purposes? If this is generated by economic fundamentals, then the monetary policy rate is out in line with the market. Ideally, the central bank should bring down the monetary policy rate to where inflation is. If not, then there's something fundamentally wrong with the drops. If this is sustained and inflation is continuously above the T-bill rate, any rational treasury management will find solace in currency trading other than T-bills to give a negative return. And this disinflation process will dislodge. And a few days ago, you heard the governor of the Bank of Ghana cautioning the finance minister that the rate he's manipulating the T-bill rates to come down will affect the currency. And the governor is right, because if the banks after some time realize that the monetary policy rate is not coming down, inflation is not coming down, and they go for the T-bill rates and they will run at a loss, they will leave the T-bill market and go and buy currency, and that will put pressure on our cedi. And the cascading effect will be the transmission to inflation. The finance minister must understand this common economic principle. And I'm happy that the governor of the Bank of Ghana realizes this. Secondly, there appears to be what looks like the Bank of Ghana subordinating its monetary policy to fiscal policy, and that is dangerous. We all agree there's excess liquidity in the system. People are paid their coupons upon maturity from DDEP. People have cash in the system. When there's excess liquidity in the system, what happens? The Bank of Ghana, per the Bank of Ghana Act 2022, Act 612, and the Bank of Ghana Amendment Act 2016, Act 198, has the responsibility to ensure price stability. And the Bank of Ghana is the one that has the responsibility to mop up the excess liquidity from the system. How does the Bank of Ghana do this? The Bank of Ghana does this through the open market operations, the OMO. And if the Bank of Ghana goes to the market to issue the OMO is issued at monetary policy rate plus or minus 2%. So if monetary policy rate is 27%, let's assume the Bank of Ghana wants to do the lower end, minus 2%. That brings us to what? 25%. There is no treasurer or bank in the country who will go to the open market with Bank of Ghana offering 25%, a Ministry of Finance offering 19%, and decide to go for 19% and leave 25%. If we're a shareholder, will you agree to that? You won't agree. So the fact that the T-bill market that is offering lower rate is oversubscribed indicates that the Bank of Ghana is reneging on its responsibility to mop up the excess liquidity and subordinating that monetary policy arrangement to fiscal policy by the finance minister. And that is an arrangement this government has done, all because they want to tell the public that there's oversubscription and that there's confidence in the economy. No rational investor will do this. That is why we think that they have to really stop this and let the market take its own shape. Other than that, the consequences for the economy going forward will not be good for us. And so this is what has to be done. And if you look at the T-bill market, the minister says, oh, they oversubscribe and they are borrowing less. Let's ask the minister. Every time they go to the T-bill market, they accept offers more than their target. They accept offers more than their target. If you take every week, what target they went to the market, they accept more offers more than the target. That should tell you there's something fundamentally wrong. And the minister says they want to open the bond market for the yield curve at the long end to have a lot of purchases. Everybody will move to the short end because they don't have confidence that going forward the economy will assume the same trend as it is going. So they won't go to the long end. They will stay at the short end. And the minister is using the rates to entice them. Mind you, in Ghana we practice the Dutch auction. You cannot control price and quantity on the market. The finance minister is artificially manipulating the system and controlling price and quantity. He determines how much price he wants to give, and he determines how much he wants to buy. And the Bank of Ghana is reneging on the monetary policy arrangement to go to the open market. And so when people go to the T-bill market, open market, Bank of Ghana is not there. Even if Bank of Ghana is there, it is accepting less. And they have the money. Investors are pushing them. Go and buy bills for us. So they all have to go to the T-bill. And that is what is forcing the rates now. It is not supported by the economic fundamentals. And we think this has to be that way. So in conclusion, and even before I conclude, Minister drew my attention to something. They complain about borrowing. And Atoforsen said government has about 153 billion cedis in terms of interest payments on domestic markets to pay. That is why he says President Akufo-Addo has left with for him. And he's going to pay about 70 billion next year and the others 50-something billion the following year. If Akufo-Addo in 8 years has left you 153 billion as interest payments on the domestic market to pay, and in 2 months, you have borrowed 73 billion cedis from the domestic market. You say Akufo-Addo left you 153 billion in 8 years. But in 2 months, this finance minister has borrowed 73 billion cedis from the domestic market. In fact, today is Wednesday, Thursday, Friday, or today is Thursday. Tomorrow, Friday, the finance minister is going to borrow additional 6 billion from the domestic market, pushing it to over around 79 billion, close to 80 billion in 2 months. And this debt that you are accumulating, who will come and pay? You are leaving it for the next government to also come and pay. So this is so serious for us on the part that they are borrowing. So we can see clearly that we have a problem as a country, and we need to address this problem. It cannot be addressed by the approach that this government is going. Other than that, by the time they finish this year, I can tell you, Atoforsen will end this year with domestic borrowing in excess of 200 billion cedis. The rate they are going, even 2 months, you borrow 73 billion, if you extrapolate, it tells you that in 12 months, they will end the year with domestic borrowing of over 200 billion cedis. Don't forget, yesterday also, the former finance minister, Setepe, has indicated that they intend to borrow $4.something billion also from the international market. We are in for trouble, serious trouble. The whole of 2017, President Akufo-Addo's first year, the total borrowings he procured from the domestic market was not up to 15 billion cedis. The whole of 2017, how much Akufo-Addo borrowed from the domestic market was not up to 15 billion cedis. In 2 months, Atoforsen, President Mahama, have done 73 billion cedis. We leave that to Ghanaians. And my senior brother, Kojo Ponkruma, will conclude for us.
So, colleagues, we are once again grateful for the attention you've given us. I want to pick up from where my brother Gideon just left off and conclude on a few issues. So when government does a budget, the budget is not an end in itself. The budget is an instrument to achieve some economic ends. So the taxes that you heard Abna talk about, even where they try to fudge up the numbers, the borrowing that you've heard Gideon talking about, even at an alarming rate. But the priority of the government is what will determine where these resources will go and therefore what results you will get. As was indicated, compensation alone at the Office of Government Machinery, 2.7 billion. And if you look at that particular appendix, total compensation for about 12 ministries put together is about 9 billion. And Jubilee House alone is taking 2.7 billion. A jump from the 326 that we were talking about. So it's about priorities. It's about where you put your money. For example, if you say you want to stimulate, about 9 billion under the administrative sector, 12 about ministries or agencies. Jubilee House alone, 2.7. So it shows your priorities. If, for example, you give 50 million Ghana cedis for research, which will not translate into any economic ends, and then you have something else like, let's say, the Women's Development Bank, which could actually assist women. And it requires, from my numbers, it requires about 1.5 billion to be able to do. About 400 million capitalization before you do your branches across the country, before your OPEX, before the float itself for the women. That one, you won't give it money. So it's about your priorities. Now, I just therefore want to demonstrate to you how the priorities of the government will not answer some of the most important questions people have on their minds. Before the budget, many of you did what we call Vox Pop. You went on the streets and asked people, what do you want to see as the economic result or the economic end of this revenue and borrowing and expenditure that the government is going to do? You will recall that a number of issues were raised by many Ghanaian youth and small businesses. They were expecting that this new economic policy 2025 will address, among other things, cost of living challenges. That it will address, among other things, unemployment. That it will address investment in infrastructure. That it will address investment in education and efforts to improve the business climate, investment in healthcare, among others. Unfortunately, these issues have not been addressed by the economic policy. The priorities are elsewhere. For those who are looking forward to efforts to halt further increases in electricity bills, they have been disappointed to note that electricity prices will rather be adjusted every quarter. The minister referred to it as the quarterly adjustment of utility tariffs. Every 3 months, light bills will go up. Now, this quarterly adjustment with no policy intervention from the NDC government will mean, as I mentioned, an increase in electricity tariffs every 3 months. Worse is that the government clandestinely removed the subsidies on gas that is made available to the IPPs. Remember, because government was subsidizing, the pricing was at about $7.8 per MMBTU. If you listen to the minister in the budget, he says gas prices have been increased. Why on earth would the government increase gas prices? He hid the fact. The fact is that government, the NDC government, has withdrawn the subsidy. And that is why the price has gone up now to $8.4 per MMBTU. This gas is what is used by the IPPs to produce power, and then they'll pass on the cost to us. So in effect, two things are happening. It's a double whammy. Not only are electricity prices going to go up every 3 months, it will be going up at a higher rate from now. So there's no hope when it comes to the reset of energy pricing. Fuel price increase, for example, which influenced the choices of many drivers in the last election, also did not see a respite in policy direction. Contrary to the NDC's manifesto promise that they were going to use the special petroleum levy to intervene in the market and cushion consumers, the government went silent on that in the budget. Ladies and gentlemen, without any policy intervention announced in the budget, what it means is that drivers can expect that the rises in fuel prices will continue. Already since January, I'm sure you've observed how fuel prices are performing. And when the government had the opportunity to bring their economic policy, they were quiet on it. So there's no hope when it comes to resetting on the matter of fuel prices. Food inflation. You remember before the election, everybody was talking about food inflation, the size of a ball of kinky, the pricing of food stuff. It's been a major challenge to most Ghanaians. Now, you will recall that the NPP introduced the Planting for Food and Jobs program, which was aimed at boosting productivity. But there were some outstanding issues that needed to be dealt with to ensure that that increased productivity could translate into stable or reduced prices at the markets. In the policies outlined by the government in this 2025 budget, there are no efforts to deal with those outstanding issues. The government's program is only to boost production like the NPP did. The key remaining challenges such as transportation of food items from farm gates, poor storage of foodstuffs, and a liberalized pricing regime have not been attended to. And what it means is that the continuous increase in food prices have not been addressed. Food price inflation will therefore remain in the medium term. The 2025 economic policy has not addressed it. There is no hope when it comes to resetting the trend of price inflation. Transport fares. Unfortunately, you can expect that transport fares will continue to rise. This is because the government has not introduced any measure to intervene with the market forces. You'll recall that at the tail end of our administration, we announced the policy and actually started a shift towards electronic vehicles, among other things. The underlying issues of fuel and the increasing cost of imported spare parts have not been addressed in the 2025 economic policy. You recall that some of the levies on imported items, including the special import levy, was going to end by 2025. The government has imposed the special import levy from 2026, 2027, 2028. So spare parts are not coming down in prices. And if spare parts are not coming down in prices and fuel is not coming down in prices, what does it mean for transport fares? You are going to see a continued increase in transport fares. So I'm sorry to inform you that there's no hope when it comes to the reset they promised on the matter of increase in transport fares. On the matter of unemployment among the youth, which is one of the biggest issues. Remember, we did about 2.3 million jobs because through a combination of growing the economy average 7% before 2020, and then during this recovery back up to 5.7% by 2024, we were able to create a lot of space, and like Abena mentioned, in the private sector expansion to create jobs, about 2.3, and they said it wasn't good enough. So the youth were looking forward to either high growth targets to create jobs in the private sector, like she mentioned, or at least government employment programs in the public service so that they could also find jobs there. Unfortunately, neither of these two were expressed in the budget. In fact, if you look at paragraph 478 of the policy document, the government has announced a net freeze on public sector hirings. So for those who were hoping to get jobs in the public sector, sorry to disappoint you. Now go to the private sector. When the economy expanded average 7% before 2020, and during this recovery, 5.7 by 2024, we're able to create 2.3 million jobs. The government, when it submitted its program to the technical experts, they have marked the government's program that growth will drop from 5.7 to 4.4. If 7% average and 5.7 when we recovered did 2.3 million jobs, will 4.4 be able to do more than that? So if growth was expected to go higher, then you could have been having hope that young people will find jobs in the expanded economy through the private sector. Despite their rhetoric, the facts are that the hope for jobs has been extinguished in this 2025 budget. There's no resetting here. Actually, the situation will most likely get worse. We are wondering now whether this is the reason for which the government deliberately dismissed or terminated thousands of young people because they knew they were going to freeze new recruitments. Is this the reason for which they deliberately dismissed thousands of young people so that they could create an artificial set of vacancies to placate a few of their supporters who will still be expecting jobs when they come to office? While improving the job creation ecosystem is a problem, it is alarming, however, that they have elected a set of priorities to move the money elsewhere. And that's what we've already outlined to you, moving the money to Jubilee House, moving the money to OGM and other places. Infrastructure, and I'll end of these few ones. Infrastructure investments are known to be a key if you want to open up, grow the economy, create more jobs. Unfortunately, however, the government has failed in making the necessary budget allocations to give meaning to even their own planned infrastructure program. Their planned infrastructure program is what? The big push. $10 billion. If you prorate it over 4 years, that's about 2.5 billion cedis, or $2.5 billion per annum. You will expect that if the government itself is serious about its own big push, they will at least make available $2.5 billion in their first budget, when they have all the goodwill and the credibility. If you go into the fiscal tables, it's only $800 million, less than $1 billion. In effect, ladies and gentlemen, the big push itself needs a push. Else, nothing meaningful will happen in their infrastructure program. And finally, even more worrying is the Agenda 101 project, which many districts are looking forward to. It appears to be heading for a halt. Budget allocations for its continuation appear elusive. The dedicated source of funding, and you remember they misbriefed the president that there was no dedicated source of funding, that you needed $1.7 billion more to finish, and that only one had been completed. Even the brief they gave the president was not correct. 3 had been completed and commissioned. Already 400 million had been paid, so it wasn't 1.7 billion. And the claim that there was no dedicated source of funding wasn't true. The dedicated source of funding was Gift Health, which was receiving funds from the CAPEX allocation of the annual budget funding amount. Now they've constrained it, as the government is signaling that they will cut funding to GIF. Furthermore, no clear alternative financing has been identified in the budget to fund the project. And this is truly worrying, ladies and gentlemen. Not only is this contrary to the NDC's promises to health workers, you will recall that they will continue the project. You recall President Mahama, then candidate Mahama, promising the nurses that don't worry, we'll continue the projects and finish them and employ you in them. Now, you are realizing that this is becoming an illusion. Not only is it worrying, not only is it contrary, but abandoning these projects or giving them out as franchises, like the president mentioned when he came to Parliament for SONA, will jeopardize the efforts at universal health coverage. The millions of citizens in remote districts who are looking forward to their lives being saved from this healthcare intervention are now at risk. Mr. President, we beg you in the name of God, please do not abandon the Agenda 111 project for political reasons. Ladies and gentlemen, in conclusion, the 2025 budget does not offer any real reset. It does not offer any hope. Unfortunately, it will worsen the cost of living, it will worsen the unemployment situation, and it will worsen the rate of infrastructure development in our country. We thank you for your attention this afternoon, and we'll take a few questions.
Yes, please. We are going to take 4 questions. And then Honorable Kojo Nkrumah would do a summary of all of this in tweet, so that the sister stations running tweet programs can take them up. Please, are we okay? So please, yes. What's your name and station? Don't worry.
I want to find out from Dr. Amin Adam that the very day the finance minister presented the budget, in your press conference, you heard you say the NPP government never received betting tax. Is that what you want to put out, or that was a
Yes, Doc, would you want to take the questions
Yes.
first?
Okay.
So please, you have to take this seat.
Yeah, so come
Thank you.
Yeah, so let's take more questions while we wait.
So, yes, what's your name and which station of media?
My name is Kweku Sechidas. I report for GhanaMPs.com. Honorable Kojo Nkrumah, the big push, in your opinion, how best should they be implemented, looking at what you said about
Okay, so can I have a lady? Just about Saturday, we had International Women's Day, so I'm minded to implement the.
No, you're not a lady.
Are you a he for she? No, are you a he for she?
Yeah.
Yes, please proceed.
yeah, just I want to find, my name is Felix. I work with Express News. I want clarity on the energy sector. The government claims that we left behind a debt of Can you clarify why so?
1.7 billion to IPPs.
Last question. If we don't have, then that should be.
Cities?
I want a lady, please.
Cities or what?
Ladies.
$1.7 billion.
Ladies. Okay, then that should be all.
Maybe, I think went down well.
So, Dr. Amin will take the first question on the betting tax.
Well, I think that my job is cut out for me. After all that you've said, the only question you could ask me was about a controversial issue. Well, I don't want to cause more controversy, so let me hazard a response. So, the NDC in its manifesto promised to scrap 10% levy on bet winnings. That's what they said in the manifesto. And I have exactly what they said. 10% levy on bet winnings. That's what they want to abolish. And that can be called betting tax. But it is different from taxes on winnings from other forms of lottery. Games of chance, staking lotto, they are not the same as what they are promising to abolish. And so if I see in the statement by the minister that he will abolish winnings from lotto or lotteries and call that betting tax, then it sounds reasonable for me to think that he's equating betting tax, which they promise to abolish, to the taxes on winnings from other, lotteries or other games of chance. And I know that the winnings from Lotto, for example, the tax on that was not implemented. And I know that for sure, for a fact. Because as finance minister, I held several meetings on how to implement it, following petition from National Lotteries Authority. And I facilitated meetings between NLA and GRA to discuss how to implement it. So I know for a fact that it wasn't implemented. And so I could not be taking advantage of the mistake the minister made. Reasonably, if you know that betting tax is different from other taxes on lotteries, and the minister in the same statement sought to equate the two, then I needed to explain that the betting tax he was referring to had actually not been implemented. But I can also understand that, and I've listened to myself again, I've listened to the statement, and it appears the statement created an impression that I meant betting tax as it relates to bet winnings was not implemented. If that's the impression that was created by my statement, then that was inaccurate on my part. But what I really wanted to say was that what he called betting tax, as in taxes on lotto winning, was not implemented. And so I think that explains the matter.
Okay.
But I think, let me add a few issues. I think I have some issues with that. Number one, I would like to observe that I was somehow suspicious, really, whether the minister wanted to abolish the betting tax. Because if your manifesto promised that you will abolish bet winnings, which is the betting tax, I was expecting it to be very specific, that I will abolish betting tax or bet winnings, the words used in the manifesto. But to confuse betting tax as in bet winnings with taxes on other forms of lottery or lottery, if you like, for me, created a certain sense on my mind that the minister really was not clearly communicating what he intended to do. And so I asked myself, is he talking about abolishing betting tax or tax on lotto winnings or tax on winnings from games of chance? Which one is he communicating to the people of Ghana? I could not be sure. Then also, in another vein, you could interpret it to mean that betting is a subset of lotteries. And that is what the law says. But the law defines betting from other forms of lottery. The law provides definition for betting, and then also lotteries, which encompasses betting, games of chance, lotto, etc., etc. And so, if you want to abolish betting tax, you have to be very clear about that, because you cannot use betting tax to generalize for tax on the winnings from the other games of chances. So this was my confusion as well. And so, yes, and even the act that he's seeking to amend was not included in the acts that he wants to amend, you know, for the 2025 fiscal year. And so I was really not sure whether the minister meant what they promised in their manifesto. And so to sum it all, whilst I concede that my statement was misleading without the clarifications I have provided today, the confusion about betting tax or lottery winning tax is not mine. It is the minister's confusion, and the minister must come out and clarify that. And so I hope that when he submits the bills to Parliament upon change of mind, because he didn't mention the income tax amendment, which contains the betting tax. So if he decides, the government decides that they will now abolish it and submit a bill to Parliament, it will come to our committee, the Finance Committee, and we'll interrogate that and we'll seek the clarity from the minister. But the people of Ghana deserve to have clarity. Just as I provided clarity on what I meant, he also needs to provide clarity on what he meant to the people of Ghana. So I hope this matter comes to rest, right? Okay.
So on the big push, sorry.
So the energy sector debt. You see, when we took over from NDC, we inherited an energy sector debt of $2.5 billion. And the $2.5 billion didn't include debts in VRE. It didn't include debts in ECG. These were debts to IPPs and debts to fuel suppliers. 2.5 billion. By the time we left government, the total debts we left, was $2.4 billion. So if you inherited $2.5 billion and you kept the lights on for 8 years, and then you left with a debt of $2.4 billion, then you really have done so well to keep the lights on without adding to the debt. In fact, there is a document that was published by government. We call that Energy Sector Recovery Program, which estimated that when we took over with $2.5 billion debt in the energy sector, if we did nothing about the situation, because the energy sector was badly managed before we took over. Now, if we did nothing, the debts were going to increase to $12 billion in 5 years. So debts that should have increased to $12 billion in 5 years, in 8 years, ended up with $2.4 billion. That should tell you that President Akufo-Addo took the necessary decisions, the sacrifices we had to make to ensure that we found money to keep the lights on. After we handed over, you see what is happening in Ghana. Doomso here, doomso there, doomso here, doomso there. And that is why they will blame on the debts that they inherited. But we also inherited debts and we paid. ECG debts, they also mentioned as 67 billion cedis. But ECG debts, it's ECG that signed the agreements with the IPPs. And usually when ECG is not able to pay, then the Ministry of Finance comes in to pay. Those debts, where are they coming from? The IPPs we are talking about, where are those debts coming from? It was President Mahamad's government that signed the agreement, the power agreement. And they put in these agreements what we call take or pay clauses. So they signed several agreements. Some of them we didn't even need. What we call surplus capacity. And if you have surplus capacity and all of them have take or pay, you are saying that those who will not produce, once they declare availability, you still have to pay them, even if you don't use the power produced by them. Yet the tariffs, electricity tariffs, did not reflect that payment you make for the surplus capacity. So you can't pass it on to the consumer. So that is what accumulated into debts. So I'm surprised the same government will come complaining about those debts. So I hope that helps.
Okay. Anything on the big push?
Yeah, so I think if the government is really committed to their major infrastructure program, the big push, like I said, it's a $10 billion program, divided by 4. You need about $2.5 billion in your first year. They've only done $800 million in the first year budget. It doesn't look like, they are showing any sort of seriousness towards their own program, and that's why we say that infrastructure development is going to suffer, because they have cannibalized all infrastructure into the big push, and yet they are not funding it. And that is why we are worried that infrastructure development, the rate of infrastructure development, is going to suffer.
And he also asked about the implementation. Implementation should be done by the government and not us, the minority. We will hold them to the policy, but for the implementation, it is their call, and so they will have to implement the big push for all Ghanaians to benefit.
So, Honorable Kojo Ponkuma will do a summary entry. Honorable, yes. Just 2 minutes. So you guys are okay?
They are calling them to the chamber.
We are going to the. All right. So we thank you very much for having all the time to